What's up, everyone? It's Brad with the Hodl fandom. Today I want to highlight everyone's favorite topic, taxes. I'm just kidding, of course. It's probably everyone's least favorite topic. However, it is a very important one, as it could probably apply to many of you Veve NFT holders, or even NFT holders in general. So most people, I find, they sweep this topic under the rug. But I want to look out for the Veve fam and the larger crypto fam to make sure that we all stay out of trouble. Let's get into it. First and foremost, I need to disclose that I am not a registered financial advisor. Also, there are many kinds of accountants out there, and I am not a tax accountant. Because of that, this is how I'm going to frame up this video. I'll just talk about the topics in general, with topics including taxable events on buying and selling NFTs, what happens when we get OMI to NFT, token migration, and a few other things. I also want to cover the general strategies and important things to do as we approach the new 2022 tax season. If any of these apply to you, you need to reach out to your local tax authority or tax professional to see how these things affect you specifically. So there are a few big reasons why I can't talk about specifics. Number one, as I said, I'm not a financial advisor or tax accountant. Number two, the tax laws vary from country to country and region to region. Number three, even within the same country, how I am taxed will probably be different from how you are taxed. And number four, most countries out there don't even have specific guidance on NFTs, so it's a lot of interpretation. Now, I'm Canadian, born and raised here in the city of Toronto, so a lot of the references that I will have are regarding the tax laws laid out by the CRA, the Canada Revenue Agency, but I will also reference some tax laws in the US. With these examples, you will see that countries that seem to be very similar and the triggering of taxable events can be very similar, the underlying tax treatments and the calculations can be quite different. Regardless, I want to highlight some of the important things because many people are not talking about this and it should be a part of your profit-taking plan. So let's get started on some higher level definitions first. So there is a lot of interpretation in crypto and NFT taxes with the laws in both the US and Canada. You see, in Canada, it was only in 2014 when we finally got formal and explicit tax laws on cryptocurrencies. Even with that, if you look at the guidelines, they only discuss taxable events on converting assets, on defining whether it's income or capital gains, and even then, there is some gray area. So a lot of it has come down to the interpretation, and luckily now there is some precedent that we can leverage. But that's just crypto. NFTs are much different. They really only blew up this year, and the treatment has even more gray area. With it being so new, most governments haven't even provided their citizens with specific guidance on its treatment. Australia I think they're the only ones that I've heard that have specific guidelines, but most have not given their citizens anything. So just to clarify, there are taxable events, and then there's how those taxable events are treated. The how they're treated and calculated is largely undefined, so I won't go too much into detail on the how. I'll just focus on the taxable events themselves. Now, some professionals say that NFTs should be treated like crypto, and others say they should be treated more like collectibles. Both have different calculations. Now, if any government decides to release specific guidance, that would supersede any of these interpretations. But again, most countries have not done that yet. Regardless of what method you choose, it all starts with good record keeping, and I'll show you some methods on how to do that with your Veve NFTs. Let's talk about different taxable events, and first is buying and selling your NFTs, just regular buying and selling. So buying an NFT is not a taxable event, but selling is. So you should be tracking your buys and your sells. One tool to do this is the omi.veve.me website. You can log in to your Veve account using your Veve credentials. Now, this website is obviously very raw, and I'd love it to reveal more metadata, which I know that they have, but this is a good starting point. I've also tracked most of the drops this year when I was working on my OMI pricing model. Now, it's not complete, and I'm pretty sure I'm missing a few, but I'll link that below, and you can reference that file plus the website to help track your buys and sells. Now, if the IMX migration allows for better reporting, then great. And if not, then at some point in the next few months, I will be doing a full reconciliation. I'll be putting all this information on a spreadsheet and doing a full reconciliation on my 2021 activity for tax purposes. That's what I recommend doing. Regardless of the tax treatment, having your inventory reconciled will make all of the calculations later on much, much easier. So just very briefly, I want to talk about the different tax treatments in different scenarios. For Canadians, if the tax treatment is more like crypto, then depending on your activity with the NFTs, it can be treated as either business income or capital gains. Now, if you're buying and selling daily, like an NFT day trader, then it'll move that needle to say, hey, it's more like business income. If you're more casual, then it would be treated more like capital gains. So essentially, unless you have business expenses to offset those gains, your primary objective is to make sure that needle points to capital gains, since half of that is taxed. Now, if the NFTs are taxed as a collectible, it would be reasonable to define these things as what's called listed personal property. As in the real world, this includes the real world art, baseball cards, comic books, and the calculations would be much simpler. Basically, for Canadians, anything bought and sold under $1,000 is not taxed, and anything above that is treated as a capital gain or loss. For our American friends south of the border, if the tax treatment is like crypto, then you're looking at either a short-term or long-term capital gain, depending on how long you've held that NFT. If it's treated as a collectible, however, it's more complicated and there's more details on this, but there's also a 28% tax on the sale of collectibles, which is kind of high. It's kind of really high. It kind of really hurts the lower tax brackets and really only benefits the highest ones. It's the rich getting richer. It is what it is. All right, let's move on to another taxable event. Let's talk about OMI to NFTs. Now, we know that when the MTL rolls out, this is one of the anticipated features, as it should add buying pressure to the token. But it also adds complexity regarding taxes, with potentially, every time this is triggered, it could potentially have 2 taxable events. Now, this is something that people on OpenSea have been encountering for years. So let's look at 2 examples here. Firstly, as the buyer of the NFT using OMI. The first event is in regards to the OMI side of things. If you bought OMI and immediately bought the Veve NFT with that OMI, then you're essentially buying and selling at the same price, and there's no gain or loss on that, nothing to be taxed. If you've been holding that OMI for a while, conversion of this into another asset is considered a disposal of that OMI, and you need to recognize a gain or a loss on that, because the price has likely changed since then. Now, the second event in this scenario is on the NFT side of things. While purchasing an NFT is not a taxable event, when you dispose of it, that's when you need to consider the potential tax implications and recognize either a gain or a loss there. If you're Canadian, you need to use the dates and the exchange rates on that date to translate that all to Canadian dollars. And the same thing applies if you now reverse things. If you are now the seller of the NFT and are receiving the OMI tokens. The taxable events are just in reverse in that case. So as much as we want OMI to NFT as something to help make the token appreciate in price, let's also be aware of the tax implications, and let's be proactive with our record keeping. Now let's talk about the upcoming token swap as we move our tokens from the Go chain to the Ethereum network. Now, there's even less guidance on migrations because this doesn't happen often. The good news is that the general consensus is that this is not a taxable event, and there is some precedent to justify that stance. Crypto tracking software even does have a migration option, and the treatment is that it is not taxed. And the most reasonable example in the real world is like a stock split. When that happens in the real world, you're not taxed on your stocks. However, there are some professionals out there that do believe that this is a disposal of an asset and needs to be taxed, so you need to make sure that you check with your local tax authority and figure out how this should be treated for you and in your situation, in your region. So those were events, the buying and selling, the OMI to NFT, and the token swap that either has already happened or will be happening very shortly. I want to talk about something that will be happening a little further down in the future, and that's the Veveverse and some of the things that will be happening in there. Specifically, the renting of NFTs as part of the OMI utility program. Now, these events are further away and less urgent, so it gives me some time to investigate them further, but it would appear that renting out your collectibles is a taxable event. I'm I'm not sure exactly on the treatment, as there is no guidance. Again, there's no guidance on this, but my gut says it's more like investment income. But if you purchased 1,000 DeLoreans with the intent to rent them out, it could be classified as business income. That's just my gut as of right now. Regardless, I will look into this, and as we get closer to launching the Veveverse, I will do a follow-up with hopefully more information. So what can we do? Firstly, we need to have good records. Use that website that I showed you and do a reconciliation of your inventory to track details on your buys and your sells. If you're not in the US, you need to translate those buys and sells to your native currency on the date that they occurred. If you do all of that, when you take this information to your tax professional with all the backup, it makes all the calculations so much easier. Calculating your cost basis or your adjusted cost base and all the other calculations down the line becomes so much easier with all the information prepared beforehand. There are also strategies to minimize your taxes. You can time your losses with your gains. You can take advantage of the crypto wash rule, which may change in 2022. But what that essentially is you can sell your crypto now at a loss and then immediately buy that back. You can also gift crypto to a registered and qualified charity. Regardless if these topics affect you, then now would be a good time to bring up NFTs to your accountant or someone who can give you tax advice on your specific situation, again, as every country, every region, and every person can be taxed differently. One last note. It is December 30th right now. This video might get out on December 31st. I just wanted to wish you all a happy new year. It's been a crazy year with crypto, crazy year with NFTs and YouTube, and Veve has grown so much this past year. I want to thank you all for your support, and I can't wait to see what happens in 2022. All the best, stay safe. I'll see you in the next video.